What's going on, everyone? Charlie here. We have an interesting filing here to talk about out of the Nasdaq BX. They're going to be merging with the Nasdaq. So the exchange proposed to amend its rules in connection with the proposed merger of BX equities with and into the exchange. The proposed merger is the second part of a two-step process, the first part of which is the transfer of Nasdaq Incorporated's or Nasdaq's Holdco entire ownership interest in BX equities to the exchange, which will result in the exchange becoming the 100% direct owner and sole LLC member of BX Equities. So basically, BX Equities was established in 2008 as a facility of and controlled subsidiary owned by and operated by the exchange for the listing and trading of cash equity securities. It's currently governed by the delegation agreement, and they're concurrently submitting a separate filing that amends the operating agreement to reflect the transfer, which will result in the exchange again becoming the sole owner and LLC of member of BX Equities. Following the merger, the exchange from Nasdaq will be the surviving entity, and it will directly operate both the exchange's equities and options markets. Now, specifically, these amendments are going to be terminating the existing delegation to BX Equities, removing the BX Equities operating agreement, and amending the exchange's rules to eliminate all references to the delegation agreement. So I'll leave this below so you can take a look. That's pretty interesting. So I wonder why they're doing that. Let's see here. So it doesn't really give a reason why it's merging. It just gives a reason why they're doing the changes to the documents. Oh, of course. It's designed to promote just and equitable principles of trade, to remove impediments to and perfect the mechanism of a free and open market and a national market system, and in general, to protect investors. Well, shit. Why am I worried? I'll link this below.